What is time now to shift our attention over to the grain markets? Joining us this week was Luke Beckman from Central Valley Ag. We had the opportunity to catch up with Luke on Wednesday afternoon following the release of the World Agricultural Supply and Demand Estimates report. That's where we began the conversation with Luke. Let's talk about the big report that came out here on Wednesday, crop production and Usda estimates. What numbers stuck out from you from those reports?
Well, the surprise today, Bryce, was the soybean production number. Yield got cut on the soybeans, came in a half a bushel lower than where the market expected, and really allowed the carryout in beans to stay unchanged. Market was looking for something closer to 250 million bushels on the soybeans, and it stayed unchanged at 200. And so the combination of the smaller crop and offsetting demand adjustments in some capacity allowed the carryout to not increase and allowed beans to have a higher finish today.
You mentioned the soybeans. What did you see on the corn front?
Corn side was fairly routine. We did see the smaller crop with a 0.6 of a bushel yield cut. And then you had the offsetting demand adjustments with your ethanol and your feed use. And we did expect, corn export demand to get cut. We had that stocks report in late September that really forecasted that, this crop was smaller coming in. Our carryout was smaller coming in. So we knew that demand was going to have to be cut just because those carryout numbers are getting too tight. USDA wasn't going to print something sub 1 billion bushels. And so it's the market's job at this point to really make sure those demand numbers come to fruition. And at the end of the day, that means that we need to ration demand in some capacity. So price is the vehicle in which that happens. So we'll have to see how, the cash market and other things behave to see where it gets rationed.
Luke, of course, those are the USDA national numbers here in Nebraska where you and I sit and have this conversation today. USDA projecting 172 for corn and 49 bushels an acre for soybeans. That's a big decrease as compared to what we saw last year, isn't it?
Yeah, 11% cut in the corn down to 172. Fairly sizable, but, for the type of summer that we had, I think it's certainly conceivable. In soybeans, at least in percentage terms, a larger cut of 22% down to 49. And so, those numbers probably wouldn't surprise, the Nebraska producer or anybody in the Western Corn Belt. As you look across the country, though, really some good crops in other parts of the Eastern Corn Belt for sure. Iowa is a little bit split with the western side of the state being drier, but the East doing really well. So we tend to have some backyarditis as we look out the window and look at, tough crops that are maybe disappointing to us in some capacity, but we have to remember there are better bushels, better crops outside of us, specifically to the east and northeast.
When it comes to the Western Corn Belt, Luke, you described the cash market as on fire. What's your take here on those cash markets and any predictions you want to make as we continue through the harvest season?
Yeah, really the setup for this was a tight pipeline or an empty pipeline coming in. We really coasted into harvest on fumes. And demand has been robust. We haven't been able to ration demand over the last year. And so a lot of your consumptive users are still hungry to buy bushels, source bushels, find bushels, just to continue to either process it or feed it to livestock. And so, with a local crop that hasn't been able to recharge the pipe as quickly as we want to, you've really seen a strong cash inverse carry forward into what would typically be what we call gut slaughter, the middle of harvest. And so we really haven't seen that basis pressure. We haven't seen, consumptive users or elevators feel comfortable with, the bushels that are out there. And so you've seen historically strong basis values in the Western Corn Belt. And we probably expect that to continue from the historical norms through this balance of this calendar year.
With those things said, Luke, it makes for some challenging considerations when it comes to what to do, storage and the economics that come to play with that. What would you like to share with our viewers about that today?
Well, Bryce, we've been receiving a lot of those questions. The futures price is really attractive. The basis is the best it's ever been for this time of year, at least recently. And so you're dealing with cash corn, right around $7 in a lot of locations, and soybeans on either side of $14. And so we've had producers asking the question, what am I doing putting a $7 commodity in the bin, or should I do that? And so I think it's important for producers to consider the economics of that decision. And the biggest one associated with that is your opportunity cost. And, if you think about bushels that are in a bin They can sit there as bushels, or you can take those, to a market of some kind and turn them into dollars. And so that opportunity cost is interest. And so if you take a $7 commodity and apply, today's market rate of interest, it's going to cost you 4 cents per bushel per month to store that corn crop on your farm, whether the bin's paid for or not. So that's a variable cost component to that decision. And so if you're going to store that crop for 6 months, you need to keep that in mind in terms of, what will it cost me? What do I need to see basis and spreads appreciate by to justify that decision? Because there are alternatives to keeping your price open besides storing the grain physically on farm. You could take it to market right out of the field. You could sell it and re-own it. Otherwise, basis contracts are offered at most all destinations. That's another way to physically push corn into the pipeline, but keep your futures price open. And so producers need to think through those, work with your advisor to consider what the best alternative for you might be, and understand that there is a cost with putting grain on farm, even if those assets are paid for.
All right, Luke, I'll give you the final word this week. Just a few seconds left. What do you want to leave us with this week?
Continue to focus on your numbers, focus on 2023. We know those prices are lagging the current crop. They've been that way for several years with this inverse that we have. So as you make fertilizer and seed decisions this fall for the 2023 cycle, put those budgets together, get an idea of where those break-evens are, because there's probably some profitable opportunities that you can take today to cover what are historically high input prices.